In a significant shift in regulatory attitude towards cryptocurrencies, the Securities and Exchange Commission (SEC) is cutting back its dedicated enforcement unit focused on the digital asset sector. This decision, which involves reassigning some of the 50 lawyers and staff members who were tasked with monitoring and regulating the crypto industry, marks a pivotal moment in U.S. cryptocurrency regulation, especially under the leadership of President Trump and the newly appointed acting chair Mark T. Uyeda. The SEC's Crypto Enforcement Unit was established during the first Trump administration in 2017 and expanded significantly under former chair Gary Gensler, who was known for his stringent stance against unregulated digital assets. Gensler's leadership saw the SEC bring forth over 100 enforcement actions against various crypto platforms, including a prominent case against Coinbase for allegedly operating as an unregistered exchange. This aggressive approach positioned Gensler as a prominent figure in the crypto community, often viewed as an adversary by industry participants. The recent changes initiated by Uyeda, who has shown a more favorable view towards the crypto industry, are seen as an effort to recalibrate the SEC's approach. Uyeda swiftly established a task force led by Hester Peirce, an SEC commissioner known for her advocacy of a lighter regulatory touch on digital assets. In her recent position paper, Peirce criticized the SEC's past regulatory methods, arguing they lacked both clarity and practicality, and asserted the need for a framework that encourages innovation while protecting against fraud. Coinbase's recent actions reflect this evolving landscape. The exchange is actively urging U.S. banking regulators to allow banks to engage more fully in cryptocurrency services, including custody and trading execution. In a letter addressed to key financial regulatory bodies, Coinbase argued that existing interpretations effectively create barriers for banks wishing to enter the digital asset market. This push for regulatory clarity aligns with the broader industry sentiment that clearer guidelines are essential for fostering growth and participation from traditional financial institutions. The implications of these regulatory shifts could be profound. Industry experts suggest that a reduction in enforcement could lead to an influx of investment in cryptocurrencies, possibly propelling the market to new heights. A recent report by Global Market Insights predicts that the global crypto trading platform market could exceed $84.8 billion by 2034, driven by increasing adoption of advanced trading tools and crypto derivatives. Centralized exchanges are expected to maintain a dominant market share, appealing particularly to institutional investors drawn by their high liquidity and competitive trading conditions. However, concerns linger over the potential for increased risks in a less regulated environment. Former Gensler advisor Corey Freyer cautioned that easing regulations could remove essential safeguards that have historically protected investors and maintained the integrity of capital markets. As the SEC undergoes this transformation, the balance between fostering innovation and ensuring market security will be a critical focus. Looking ahead, the crypto industry is poised for both challenges and opportunities. The SEC's reorganization signals a more industry-friendly regulatory landscape, which could catalyze further advancements and participation in the digital asset space. However, stakeholders must remain vigilant to safeguard against the risks that accompany a rapidly evolving and less regulated environment. As the dialogue between regulators and industry participants continues, the future of cryptocurrency regulation in the U.S. will likely play a significant role in shaping the global crypto market and the ever-evolving landscape of cryptocurrencies. Market dynamics can shift dramatically within short periods, often influenced by broader economic factors and industry-specific developments. This week, the cryptocurrency market has witnessed notable fluctuations, particularly in the performance of Bitcoin and XRP, amid ongoing geopolitical tensions and shifts in mining output. On February 5, 2025, XRP experienced a significant price surge, drawing attention from investors as the market recalibrates in the wake of ongoing trade tensions involving the United States and China. Analysts speculate that these geopolitical pressures could lead to a downturn for Bitcoin, which has been trading around $98,500, a figure that some predict could drop to as low as $80,000 in the coming months. This potential decline is attributed to the uncertainties surrounding the U.S. economy and its implications for cryptocurrency investments, as stated in a recent report by Barron's. As Bitcoin grapples with these headwinds, the mining landscape is also shifting. Riot Platforms has ramped up its Bitcoin output, positioning itself as a major player in the mining sector. The company's recent performance contrasts sharply with Marathon Digital Holdings MARA, which reported a 12% decline in production. This competitive dynamic highlights the growing importance of operational efficiency and technological advancements in mining as companies vie for market share in a sector that is becoming increasingly saturated. Meanwhile, the discussion around which cryptocurrencies to invest in continues to evolve. A recent analysis from The Motley Fool presents a compelling comparison between Bitcoin and Solana, suggesting that both cryptocurrencies offer unique value propositions. Bitcoin, with its established protocol and scarcity limited to 21 million tokens, remains a safer long-term investment option. Its historical resilience and capacity to retain value against inflation make it attractive to risk-averse investors. By contrast, Solana presents a riskier yet potentially more lucrative opportunity for those willing to engage with its rapidly developing ecosystem. Within the fast-paced world of cryptocurrency, meme coins have recently emerged as a significant player, capturing the attention of both investors and the public. However, the roller coaster ride of their value has been particularly pronounced in the wake of Donald Trump's second presidential inauguration, during which his newly launched meme coin Dollar Trump experienced a dramatic decline of over 75% from its peak. This volatility has sparked discussions about the sustainability and future of meme coins in the broader cryptocurrency ecosystem. Upon its launch days before Trump's inauguration, Dollar Trump quickly became one of the fastest growing meme coins, reaching a staggering market cap of $13 billion. The fervor surrounding its introduction was palpable, with many viewing it as a novel venture in the cryptocurrency space. However, the excitement was short-lived. Just days later, the launch of a competing coin by Melania Trump sent $Trump's value tumbling. This situation highlights the highly volatile nature of meme coins, which often rise and fall based on social media trends and celebrity endorsements rather than intrinsic value. Meme coins have gained popularity in recent years, representing a significant 41% share of the total Web3 market capitalization. According to a report by Social Capital Markets, meme coins now dominate the cryptocurrency landscape, surpassing established blockchains like Solana and Ethereum. In 2024 alone, meme coins accounted for 22.49% of the market, with between 40,000 to 50,000 new tokens being created daily. The trading volume of meme coins soared, with the number of actively traded tokens jumping from 740 to 1091 in just 1 year. Industry experts acknowledge the dual-edged nature of this market. Jeff Dorman, Chief Investment Officer at Arca, noted that the emergence of the Dollar Trump token signals a shift in how cryptocurrencies can be leveraged for capital formation and customer engagement. However, the inherent risks associated with meme coins cannot be overlooked. As To Bautista, a research analyst, pointed out, investing in these tokens is akin to gambling, relying on the greater fool theory, where the investor hopes to sell their tokens to someone else at a higher price. The speculative nature of meme coins is underscored by the recent fluctuations in their values. Following Trump's controversial decision to impose tariffs on major trading partners, Dollar Trump and other meme coins plummeted in value, with Dollar Trump dropping 18% in a single day. This volatility raises concerns about the long-term viability of meme coins as a legitimate investment avenue. Nick Tomaino, a crypto venture capitalist, criticized the timing of the Dollar Trump token's launch, labeling it predatory and suggesting that many investors could face substantial losses. Despite the skepticism surrounding meme coins, there are those who believe in their potential to evolve into more stable assets. Grayscale Investments has taken steps toward mainstream acceptance of meme coins, launching the Grayscale Dogecoin Trust to facilitate institutional investment in Dogecoin. Should this initiative succeed, it could pave the way for other meme coins to gain acceptance in traditional financial markets. Looking ahead, the future of meme coins remains uncertain. While they continue to attract a diverse range of investors from seasoned cryptocurrency enthusiasts to newcomers hoping for a quick payday, their success hinges on broader market acceptance and regulatory clarity. As the cryptocurrency landscape evolves, it will be intriguing to see whether meme coins can solidify their place as legitimate assets or if they will remain volatile and speculative in nature. As the saying goes in the crypto world, the only constant is change, and meme coins are likely to be a significant part of that narrative moving forward. In the ever-fluctuating world of cryptocurrencies, recent developments have sparked conversations about potential shifts in the hierarchy among leading digital assets. As XRP gains traction, a top analyst has suggested that it could soon overtake Ethereum ETH as the second largest cryptocurrency by market capitalization. This prediction comes on the heels of notable market movements and a resurgence in investor interest, raising questions about the future landscape of digital currencies. On February 5, 2025, Uyeda reported insights from Brave New Coin that indicate XRP's momentum may position it to dethrone Ethereum, which has traditionally held the second spot after Bitcoin. The analysis points to a series of factors contributing to XRP's rise, including increasing regulatory clarity and growing institutional interest, which have bolstered confidence in the asset. XRP has shown resilience and adaptability in the face of market challenges, making it a strong contender for growth, Con notes. Meanwhile, Ethereum has been experiencing its own volatility, recently dipping below $2,800 amid increased gas limits and fluctuating market sentiment. As highlighted by FX Street, the recent drop was influenced by a surge in gas fees, which rose above 30 million units, causing concern among users and investors alike. This development represents a significant challenge as Ethereum continues to grapple with scalability issues which could hinder its growth trajectory if not addressed promptly. Adding to the complexity of the current market dynamics, cryptocurrency prices have seen substantial swings in recent days, driven by macroeconomic factors such as proposed tariffs on risk assets by the U.S. government. In the aftermath of these announcements, Bitcoin, Ethereum, and Dogecoin experienced a notable decline, with Ethereum's price oscillating around critical support levels. According to the Motley Fool, Ethereum's performance has been particularly noteworthy as it managed to surge 3.8% during a tumultuous trading session, reflecting its potential to recover and thrive despite broader market challenges. The endorsement of Ethereum by Eric Trump, who suggested it was a great time to add Ethereum on social media, has also played a role in its recent uptick. This statement has resonated with investors, potentially leading to increased buying pressure. The Trump family's active involvement in the cryptocurrency space, particularly with the launch of the World Liberty financial crypto platform, further intertwines political endorsements with market movements, adding an interesting layer to Ethereum's narrative. As the cryptocurrency market continues to evolve, the competition between XRP and Ethereum will likely intensify. Analysts are closely monitoring developments, particularly how regulatory changes and technological advancements in blockchain technology may influence investor sentiment and market stability. The recent bullish sentiment surrounding XRP suggests that it may not only challenge Ethereum's dominance but also reshape investor strategies towards altcoins. In conclusion, while XRP's potential rise poses a significant challenge to Ethereum, the latter's ability to navigate its scalability issues and capitalize on market endorsements will be crucial in maintaining its position. As the cryptocurrency landscape adapts to ongoing economic shifts and investor behaviors, the coming months are poised to reveal whether XRP can indeed dethrone Ethereum or if the latter will solidify its standing as a key player in the digital asset arena. Investors will be watching keenly as new developments unfold, which could set the stage for the next major chapter in cryptocurrency evolution. As the cryptocurrency landscape evolves at a dizzying pace, investors are grappling with critical decisions about where to allocate their funds. With the new year upon us, the question looms: which cryptocurrency is the better investment for 2025, Bitcoin or Solana? Both coins have their proponents, each offering distinct advantages and risks that could appeal to different types of investors. Bitcoin, often regarded as the gold standard of cryptocurrency, has a market capitalization that dwarfs most competitors, currently standing at approximately $2 trillion. Its price as of February 5, 2025 is around $98,500. Bitcoin's appeal lies in its stability and established protocol, which has remained largely unaltered since its inception. This stability makes it an attractive option for long-term investors seeking a reliable store of value. The finite supply of 21 million tokens ensures scarcity, which, combined with increasing demand, has historically driven prices upward. An investment of $5,000 in Bitcoin 5 years ago would have appreciated to nearly $53,000 today, showcasing its potential for growth, especially in an inflationary economy. Alex Carchidi, a financial analyst at The Motley Fool, explains that Bitcoin's predictability is its primary strength. For patient investors, Bitcoin represents a relatively safe harbor in the volatile sea of cryptocurrencies, he says. The ongoing integration of cryptocurrencies into traditional financial markets, coupled with macroeconomic factors such as inflation and interest rates, further supports Bitcoin's position in an investor's portfolio. In contrast, Solana, with a market cap of approximately $122 billion and a current price of $206.21, is characterized by its rapid development and adaptability. Unlike Bitcoin, which is seen as a stable asset, Solana is actively evolving, making it more suitable for investors looking to capture short to medium-term gains. The recent launch of a presidential meme coin on its blockchain and the potential approval of exchange-traded funds ETFs tied to Solana signal an exciting phase for the platform. These developments could position Solana for explosive growth, especially under a pro-cryptocurrency administration. However, this dynamism comes with inherent risks. Solana's relatively new status compared to Bitcoin means that its ecosystem is still maturing, and investors must be vigilant about its ongoing developments. Carchidi notes Solana's active development means it has more upside potential, but it also carries higher risks. Investors need to stay engaged and informed to navigate its rapid changes. The competitive landscape of cryptocurrencies means that Solana could potentially lose market share if it fails to keep pace with technological advancements or if other blockchains emerge as formidable competitors. Ultimately, the choice between Bitcoin and Solana hinges on an investor's risk tolerance and time horizon. Bitcoin's conservative long-term growth profile may appeal to those wary of volatility, while Solana could attract more hands-on investors eager to capitalize on its growth potential in the years to come. As the cryptocurrency market continues to mature, both assets present compelling cases for investment, each with its unique advantages and challenges. Looking ahead, the coming months will be crucial for both cryptocurrencies. As regulatory environments evolve and technological innovations emerge, investor sentiment will likely shift. Thus, staying informed about market trends and developments will be essential for anyone looking to make strategic investment decisions in the cryptocurrency space.